Hey folks, good evening. Welcome to another money space. Of course, with me, Kalu Aja. On this space, we always talk money, the economy, and of course, finance. And this week again, we're talking finance, personal finance. We've got the team from Bamboo, uh, SEC approved trading, investing, personal finance app. And we're going to do half year review of the market, US, Nigerian market, right? That's what we're going to talk about in the next 1 hour. We understand you guys have got to go watch your football finals. We get it. So we're going to keep the time. But it's going to be an interesting space. I've seen the pre of the slides, and it is packed. So if you want to join in, give us an hour. I think it would bless you. Also, going to record the space. So of course, it's going to be on Twitter. It's going to be on the podcast, also on YouTube. If you're a visual person, which most of you are, just hop into YouTube and you can see us there with all those great visuals that Bamboo is going to share with us, right? Fantastic. So I've got my guest. I don't know what handle is going to join in from. What handle are you joining from? Oh, there we go. Here's requested. Okay, gotcha. Just gonna add you guys, and then we can just kick it off, right? I'm also gonna share on Twitter as well, so you can follow up the conversation also on Twitter and also on YouTube. Like I said, great visual. So Bamboo, hi. Is that you? You wanna say hi to the guys watching?
Yeah.
Hola, can you hear me?
Hi.
Yeah. How you doing?
Yeah. Hi.
Fantastic. Good.
Really, thank you.
Yeah, I can hear you. You're a bit crackled, but I can hear you. Yeah. How are you doing today?
Doing well. Thank
Okay.
you for having me.
Fantastic. So, I mean, so let's get right into it. You want to introduce yourself first of all?
Yes, of course. My name is Daniel Upalagi. I'm a senior research analyst at Bamboo. I lead equity research across the US and the Nigerian markets.
Oh, that's short and sweet. Thank you for that. All right. So okay, we're doing half year review, right? So 2026, we're at the point in June where we look and see what's going on in the market, how we have fared, and again to position ourselves for the next 6 months. So we're looking at two markets, right? Nigeria and of course the US, are the two big markets that we have. I see you guys have titled your presentation half year to 2026, two markets, two different games. Very interesting. You want to walk us through this introduction as we go into the slides?
Yes, of course, happy to. So this is sort of an interesting title for us because it also sort of reflects the, I think it's a play of the games that are happening in the World Cup. So while there are games in real life, there's also a game being played in the stock market as well. So the way we look at it on the Nigerian side, it's a bit more offensive because there's a lot of interest in the NGX. People are trying to go in, get in on some of these names and participate in the rally that has been going on. But US markets, it's kind of different, right? Because of the volatility being seen in the market, inflation being a top concern. There's been the past couple of weeks, so it's a bit more of a defensive game that's being played there. And it's really important for investors to always know what game is being played, because if you don't know what game is being played, how could you win? So
Definitely.
that's the approach that we're taking to evaluating the two markets.
Yeah, that's like if you don't know the game you're playing, you don't want to play offense in a game that is supposed to be defensive, and the vice versa. You don't want to be defensive in a game you should be attacking, right? So let's start from Nigeria. A historic rally, a record stumble, a fast recovery. Numbers here are pretty impressive. Nigeria has done 56% year to date. I understand we're now in dollar terms the best stock market in the world as at when this data was taken. June, we saw that big crash, reserves are up, inflation is moderated, it's flat like, it's not really going up, but it's flat. And the indices all look good. I mean, this is celebratory, right?
Yes, we can actually say it because it is important to acknowledge our wins. So while there has been a sell-off in the past, I think in June was not a very great month for the NGX, but then you just have to zoom out and take a look at the entire year with new context, and it's been an excellent year for the NGX. It's not easy to be the top performing stock markets in the world on a dollar basis. And that's because we're seeing a lot of the reforms starting to filter through the markets. We're seeing new money flowing into the markets. We're seeing stability in the in our exchange rates as well, and also sort of like record numbers when it comes to our dollar reserve. So I think it's worth celebrating, but it's also understanding where there's still like some gap within the market and position accordingly.
Yeah, oil and gas up 90% year to date. This is the index. Some oil and gas companies were up nearly 200%. Was this oil and gas up because of the war in Iran, or is it just like efficiency, productivity issues with Nigerian companies back home?
I think it's a mix of a couple of things. That's one thing with the NGX, right? It's hard to pinpoint what exactly is driving performance. Like it's too early to say, oh, it is this specific thing. Rather, it's more of a combination of different factors. And what we're seeing in the NGX is it's sort of like a rising tide, lifts all boats. But yeah, a lot of attention is being drawn by the oil and gas companies because of the war in Iran. Higher oil prices are definitely going to be good for them. But then, that very compare if that actually translates into higher earnings, because higher oil prices also mean higher costs sometimes. But then, seeing like money flowing in from the pension reforms, foreign capital, it typically goes to the heavyweights. So the oil and gas index does get a big, and Nigerians are really paying attention to that sector. So I think it's a mix of a couple of things: institutional capital, stability, reforms, and definitely the crisis happening in Iran. So altogether, it does sort of contribute to that outperformance we see from the oil and gas.
Good, better. And guys, we have about 12 slides to run through. If you have a question, just basically just request to speak. So we just sort of queue you up, right? Let's come back to the United States market. 9.6% S&P return, the best half year in 5 years. That's very telling. The market has been sort of sideways. Now, the best half year in 5 years, driven by DRAM, the chips, SpaceX. All these guys are there's just this story in the US about chips, RAMs, AI, and that's just driving the market up. Even though Brent crude oil is up, and when crude oil is up in America, it starts to smell, what's called slowing down the economy. But the markets are up. What's going on in the US?
Yeah, so the US market is sort of like an interesting market. So heading into the year, we were definitely bullish AI infrastructure. So the story for the US is that, look, AI infrastructure was going to be sort of like the tune everyone is dancing to heading into the year, right? So a lot of spending from the hyperscalers, so your Apple, actually not Apple, your Meta, Amazon, Microsoft, spending a lot of money to set up like AI infrastructure. So that definitely trickles down into some different set of companies. There are bottlenecks for sure because demand for compute is through the roof, and manufacturers cannot manufacture the chips. They can't manufacture the electronics after all. So that has been the core driver of sort of like the performance in the US market. Your SanDisk, memory chips, Micron as well. Semiconductors, the ARM, Intel, really absolutely fantastic numbers. But also it's sort of the Achilles heel when it comes to the US, because any sort of slowdown in that infrastructure spending is definitely going to cause a significant pullback because everybody is resting on that foundation. And it's showing some signs of weakness, but if anyone's guess as to whether we see a crack.
Yeah, I like that we had an AI engine run through a wall. I mean, that just encapsulates both things we're looking at. I mean, last week we saw SK Hynix casually come to the US market and raise nearly 25 or 27 billion, just casually. A company that was like 2 years ago unknown, and now the largest single foreign listed stock in the US market, beating everyone, even Aramco, the Alibaba. It's crazy. Yeah.
Yes, it's definitely crazy. And it's also a testament to just the demand we're seeing for, AI infrastructure. So SK Hynix, they have an interesting problem, right? They can't get, the great chips to manufacturers fast enough. What that's being raised is actually being deployed into production facilities, etc. And historically, SK Hynix was listed on the Korean market, so it was easily accessible for retail investors on the US market. So there was definitely a lot of demand for this IPO. I mean, prior to this, institutional investors were able to get access to SK Hynix via leverage using swap options, etc. But now, then kind of like making it easy for regular investors to access was absolutely amazing. And we saw that it was a very wonderful debut. They raised the money that they needed, and the stock has been doing really good. But then again, tied to sort of like volatility we're seeing even in the Korean market where the actual stock is domiciled. So it's sort of interesting, and I think their successful debut is also sort of like a tell for other companies that may want to do the same.
Okay, let's come back to Nigeria. I like this slide you guys have. Again, guys, I'm sharing the slides on YouTube and also on Twitter, so you can follow and just read the slides and then we're talking around, right? So this slide is titled How the Rally Happened. We're looking under the hood in Nigeria. 4 engines, 1 currency. You talk about the FX trust coming back. We know Nigeria is on the watch list for the frontier market. The refinery effect, Dangote, that's just good news. People are coming to Nigeria to interview him. So it's just going to be a feel-good effect on Nigeria. It's a booming market. Pension market, like you said earlier, they increased their allocations, so more funds are coming in. Of course, Nigerian banks have recapitalized. They are stronger. They've got a lot of capital. 1, 2, 3, 4. But I like your question here. You are asking, is this Nigerian companies just re-rating from being too cheap? Is the world now that Nigeria is really a very, very cheap market that you can get into? Or are you saying, what is the Naira arithmetic? Walk me through those questions. What is that question actually asking?
Okay, so there is sort of like a view among some analysts that, historically, or at least compared to developed markets, the Nigerian market, the stocks on the market are just actually cheap, like they're undervalued compared to their peers, right? And some people have used that as a foundation to argue that, look, this rally is sustainable, NGX is not in the bubble, etc. And there's also some arithmetic in terms of, when you kind of like convert for FX, does it make Nigerian companies cheaper or more expensive? And, it's not really the regular investors' sort of position to try and figure out which of these things are true. Rather, you just want to make sure that, look, whatever is the answer, my portfolio is good. The stocks I pick are good. And that's why it's something to think about, like have it in the back of your mind, but you also want to position for like whichever answer. If it is true that Naira stocks are just re-rating and coming to their actual valuation, good. If it's not true, what do I have on these companies that still make me confident that, hey, this is a good use of my capital?
Gotcha. And just to be clear, how do we know a company, a stock or a market is cheap? What are you looking at? What metric are you using to compare Nigeria to, say, South Africa, Egypt, the US? What metric?
Yeah, so we look at, standard, you look at the PE ratios, you look at, you don't look at that in isolation, so you try to look at it as in comparison to their peers. So even, for example, if you look at Dangote Cement, for example, you would try to compare that with other companies that are operating in that space and also across other markets. So, and then you can do some adjustments for like Naira, etc., etc. But really, you want to look at the price to earnings ratio, return on assets, return on equity. So it depends on the actual company you're looking at, because you look at companies differently, use different metrics to value them. But you stick to the good stuff, you stick to the stuff that everybody understands, and the stuff that you can easily compare across markets and across same stocks in the same industry.
Okay, this next slide is very interesting. You are going deeper into Nigeria. You are asking this question. We asked this question last week when we had the guys on the stock market, and we talked about, is the Nigerian market getting better, i.e. structurally, or is it just more money coming into the market to move the market? And I liked your green items, what improved in Q1. The T1 settlement. I mean, America have T1 settlement with extended trading hours. America has T1, so we're there, right there with America. And then we are doing extended trading. We can trade out up to 4 p.m. That share price movement where you need to have more volume before lower price stocks can go up. Game changer again. It removes a bit of the, should we say, manipulation in quote, and it makes it a bit more. We're seeing the real volumes driving prices. And you've seen the result, $3 billion in dollars raised in Nigerian stock market half year across corporate and sovereigns. Liquidity is still thin. You mentioned that costs are still high, short studies still exist, and there's still that education gap. But let me come down to this particular your item, your line item here. When we were here again last week, we talked a lot about value trapping in Nigerian stock market, where people buy stocks and can't sell. The stock is doing well, but they can't sell because there's no other party on the other side. Volume is so weak. So when you talk about this, the slides on top, please mention about the bamboo liquidity meter. I think folks want to understand what that is as a whole, and then what bamboo is doing with that liquidity meter. What does that mean, and how can an investor use it going forward?
Thank you for that question. That's a question. So yes, really, liquidity has been one of the key issues on the NGX. You're trying to buy, there are sellers, you're trying to sell, there aren't any buyers. And that is the top reason trades fail on the platform. And we have a new feature, liquidity meter. NGX, once you tap on it, you're going to see a rate between 1 to 5. Lets you understand how a stock, and we do that by determining how much trade, how much trades, how much buyers and sellers on either side, and how much use of shares they are trying to get into. So typically, before you place an order as an investor, that's the first thing you want to look at, right? As you go into the app, you tap on the stock, you go to the liquidity meter, and you see the rating. A 4 out of 5 or 5 out of 5, that's what you're trying to aim for. And you can also go a bit further. You can also go a bit further by looking into the order book itself. So when you look into the order book, you see a live view of buyers and sellers. So if, for example, you want to buy, let's say, Dangote Cement at 100 naira per share, you can go into the order book and see if there are people actually selling at 100 naira a share, or you can see what prices they are selling at, so you can match those orders, and you have a smooth and a wonderful experience.
So you're saying 4 and 5 is what I should be looking out for. If I want to buy and I click that buy, it shows me liquidity meter. I want to see 4 and 5. That shows that stock is liquid.
Yes, you should be aiming for 4 to 5 out of 5. Okay. That's typically the sweet spot. So once the liquidity meter is green, it means you're good to go.
Fantastic. I'm going to use that. I'm going to also share that as well, because I think that's what most people are really interested into. They don't want to get, I've made a profit and I can't get out. So that's a fantastic information I'm going to share once this is over. Let's come back to Nigeria again. Q3, two big catalysts you're talking that's going to basically drive the market. The FTSE, the planned inclusion of Nigeria into the frontier market, and of course, Dangote. Talk to me about those two. If these two happen, where do you see this index going to? I mean, you're not going to give us a number, but where do you see the index going to? To the moon, or is it just a stratosphere, or just to a skyscraper height? Where would it go to if we get the inclusion of Nigeria into the FX market, and of course, Dangote refinery lists?
Okay, so the honest answer to that question is, like with everything, it depends. And that's why I try not to oversimplify the Nigerian market, because it's still a collection of different factors. But let's narrow it down. So for FTSE, right, this planned inclusion into a renaming, classifying, a reclassification rather, of Nigeria as a frontier market. Now that is, the win there is more of a narrative, right? So it telegraphs to foreign investors that, hey, look, this market is open, it's ready to receive capital. Some studies have shown that the money that's meant to come in it's not even up to 1% of the index. So it's not necessarily that all this foreign money is going to start pouring in, right? It's more like people are going to understand that now this market is ready for you to invest in. And we can't really capture exactly how much is going to come in, but we are going to know that, look, money is going to come in, right? And then when you think of the Dangote refinery, now it's planned, right? There hasn't been any submissions to the SEC saying that, look, this listing is going to happen, and that was why there was this circular that was released banning any form of advertisement around it. But the idea is that most of these things, you want to think of them as what they mean for the market. It's not the thing itself. For example, oil and gas is good, right? capital is flowing into that sector. The crisis in Iran is helping, but it's not necessarily oil and gas stocks that will benefit from for example, having a more stable currency, having more dollar reserves. It's more like businesses that need to import stuff, right? They have a stable currency and they can plan better. So it's the same way we look at the Dangote refinery. Like if the listing is successful, it shows that look, our markets are deep enough to absorb this kind of capital. It gives confidence to investors that hey, if you're trying to raise money, you can actually do that on the Nigerian market, right? So we have a lot of private companies that will see that and you give them the confidence to say, hey, look, I want to bring my company to the NGX. So it's more of the narrative wins that we need right now because as our market is getting more mature, these are the things that demonstrate that indeed the market is becoming more mature. It means that number one, foreign investors are able to say, hey, look, this market is not risky. I can put investors' capital there and I can pull it out. We need investors to believe that, look, I can take my company that's private, list it on the market, and actually be able to raise money I need for working capital or, doing some growth stuff. So that's how we look at these things necessarily.
Fantastic. Let me just real quick. Yeah, there are figures that have sent me a message that they request to speak, and after like 5 minutes or so, they get kicked out of Twitter. So let me just add a few guys to speak. So that way we can get them to talk, and then we're just going to go back to the US market where we are. So we've got Nigerian Reset Movement, and I've got Nana. So Nigerian Reset, go ahead and we'll take Nana after you. Go ahead, sir. Nigerian Reset.
Yeah, Kalu, good afternoon. Thank you for giving me the mic. It's been a while since I've been on one of your platforms, and I apologize if there's any redundancy, if you've covered this already, but I kind of get the sentiment that there's some optimism regarding the market at the moment, especially with the announcement that it's been one of the best, if not the best performing market globally. I don't share this optimism, and I'm surprised that analysts, whether in Nigeria or abroad, do, because for a couple of reasons, and I'm interested in getting your feedback and those on the platform. Number one is, as always, the macroeconomic story, the investment thesis doesn't align to the realities on ground, whether it's in terms of the microeconomic realities that we face, or more to the point, the kind of structural, fiscal, and even monetary environment that we face, right? And so this buoyancy in terms of stock market performance is more indicative to me of an extractive economy at work, that wealth is not well distributed, and because it just doesn't make sense that 90% of us live on less than $5.50 a day, but we're seeing record numbers in the stock market. And we're seeing the same kind of dichotomy in the US market as well, where the underlying economic realities of the people is devoid from what we're seeing in the stock market, which in the US context is more of a function of loose money that's been around for a while and really over market exuberance. But again, in the Nigerian context, it's more indicative for us that this is hot money. This is money that isn't going to stay around. This is FDI. And this is more of a question of international institutional investors rebalancing portfolios, seeking diversification, seeking alpha, rather than an investment in the thesis that these Nigerian companies are going to be long-term growing concerns, at least based on the majority of Nigerians supporting that growth. Right. I'll give you an example.
If you don't mind, let's reset. If you can get to the question, I'm so sorry. We have a hard stop for the World Cup.
No problem. So my question is, how do you perceive this kind of contrast between what's happening in the stock market and what's happening in the real economy in the Nigerian context? And is it indicative of hot money rather than confidence in the market? Thank you.
Yeah, it's a lot of questions there. Let me just see if I can understand to say this right. If you look at the Nigerian and the American markets, I think about 45 to 50% of American households invest in the stock market. I think those numbers are a bit correct, 45 to about 50%. In Nigeria, you don't get to a percentage. We have about 600,000 CSCS. Of that 600,000, about 300,000 are active. So it compares 300,000 to even 200 million. You don't even get a percentage. But look at the difference now. In Nigeria, more than 50, nearly 60 million Nigerians gamble. So the argument is not that Nigerians don't have money to invest. It's where are they investing? they prefer to do the gambling than to invest in a company. Now, to your second question, that this growth story in Nigeria might not be, it might be hot money and not be a Nigerian story about resilience and market. Dangote Petroleum, Dangote Refinery is not the number one supplier of aviation fuel in the entire world. Iran maybe throttle that forward, but it is what it is. Dangote fertilizers supplying American, Brazilian markets. So without Dangote, I don't know what Europe would have done. And I'm making a financial statement. So there is some meat to the story that in Nigeria there's Dangote, there's BUA, there's MTN Nigeria that's tapping into a growing Nigerian middle class, that is there. So yes, you are correct that if you look at the flows, the official flows in Nigeria, there's more of foreign portfolio investments. But where is that money, the foreign portfolio investment coming from? It's coming from Nigerians in the UK, about 30% or so is coming back from, not Nigerians, but from the UK, 30% is coming back. So I hear, yes, money is coming back and it's coming back as FPI, but there's also some options here in Nigeria that investors are saying, I want to do Dangote Sugar, Dangote Refinery, BUA, MTN, Nestle, all the multinationals that had the negative when we had the devaluation are all back on the positive. So it's an eye of the beholder story now. And that's why we have Bamboo in here giving us the numbers. It's an eye of the beholder story. If you feel Nigeria is still a risky market and you want to stay away, Bamboo is basically saying, what are you looking at? Is it too cheap? Or are you looking at the numbers and saying, wow, this might be an opportunity for me to get in? You buy a stock, a good stock, when it's down. If you buy it when it's up, you've bought the premium already. So there's no right or wrong answer. It's your view. So my view, the data supports both our views. I think in the end, the investor's got to put his money where he feels it's going to be, should we say, that will match his risk and objectives, more or less. I mean, yeah, that's how I'll answer that. Let's get Nana real quick. Nana, then we'll go back to Bamboo. Nana, how you doing? Nana Kwame, if you can hear me. Nana going once, Nana going twice. But let's come back to you, Balaji, real quick, yeah. Again, I just want to get through your presentation so that way, then if we have more questions, we can take them, right? I'm not cutting anybody off, right? Let's come back to the US market.
Hello.
Oh, no, real quick, yeah. I called you earlier. Yeah, Nana, what's on your mind?
Yes, I'm back online.
Yes, please go ahead.
So obviously my name is Nana Kwame, and you know I'm Ghanaian, right? So my problem is it's basically extremely difficult for people who are not Nigerians to. It's impossible for them to buy Nigerian stocks, and right now Nigerian stock is the best performing stock in the world right now.
There
And
you go.
it's something that everybody wants to get into. So it's a bit frustrating on our side because of where you are. You cannot go into the stock markets just because of your location, even though you're on the same continent. And yet again, to places like America, they can trade every stock. They trade European stock.
Yeah, that's a good question. Now let me I think I get your gist. Let me pause you.
I want to know.
Yeah, let me pause you real quick. Let me get Bamboo to answer just on that specific point. How it's easier for anyone that is not Nigeria, maybe in Africa, to invest. I know there's Bamboo. I see Bamboo South Africa. I see Bamboo Ghana. Just real quick, Bamboo. How is it easy for a gentleman like this to invest? He's not Nigerian. Is it easy? How can he do it?
Can you hear me?
Yes, I can hear you. I heard your question. We're going to get Bamboo to answer you now.
Right. Yes. So that's basically my question because I want to be able to.
Okay.
Trade sending and the rest.
He's answering you now. Just give me. Go ahead, Balaji.
Yes, thank you. Thank you for the excellent question. So when it comes to access to the Nigerian markets, especially for investors in other countries. And that is something that we are actively working on. It requires a lot of engagement with the regulators, with, the financial institutions that honestly run and power those markets. So it's one thing that we have identified as a barrier that we are also trying to break down with our platform. But currently, Bamboo is live in Ghana, we're live in South Africa as well. We're also doing some work in Kenya. So hopefully, as the year progresses and as we continue to make headway in our engagement with the regulators, we're able to essentially, break down these barriers and allow cross investing across African markets, because that is our North Star, to ensure that every African is provided with an opportunity to build wealth, regardless of where on the continent that opportunity is. So thank you so much for flagging that. I just want to give you that reassurance that we are actively working on it.
Well said, well said. Let's go back to Mbolaji, see if we can finish the presentation, then we'll just take the questions in, right? So I have this one now, your slide here is about the Q3. We're not talking about Q3. Two big catalysts, both needs honest handling. I think we've done that. So the next slide I think should be the US market, if I'm not, yep. We'll come back to the US market, where you basically ask a question or make a statement. A market that costs too much, and the market is starting to say so. So you're seeing the US market, S&P, Dow, you're seeing it costs too much?
Yes, so in terms of valuation, there is a view that the market is definitely expensive in terms of forward earnings multiples, right? So there's a lot that has been priced in terms of expectations, and it's causing a situation where you have to go above and beyond those expectations for investors to even reward, your company with a good stock price performance. So the market is starting to understand that, look, these companies are trading at really expensive valuations, and some of these expectations that have been priced in is causing a bit of a very dangerous scenario, and that's why we're seeing a pullback recently in the markets. The market happens in cycles, and investor expectations are going to reset. We're heading into earnings season in the US, so it's not even a thing of, if the company beats earnings, they really have to go above and beyond when they beat those earnings for you to see like an appreciation in the stock price.
Yeah, so what I hear is that in the US, earnings are up, but I think there's this word they use now, cannibalism, where Nvidia is buying chips from, say, Micron, and then Micron gets to $1 trillion market cap. Then Micron then lists on the market. Then the equity funds then buy that listed stock on the market. So when you buy, like you've highlighted in your point, when you buy the index fund that's supposed to be the entire market, you're actually buying about maybe 10 companies and AI play. Just like in South Korea, where you think you're buying the Kospi, but you're just buying two companies, Hynix and Samsung. That's the big threat you're pointing out in this, right?
Yes, that is exactly the line of thinking that, look, the standard way to diversify is buying the S&P 500, right? The 500 largest companies in the US market. But then a third of that S&P 500 ETF is concentrated in tech and AI companies, right? So even when you think you're diversifying, you're very much exposed to this very volatile sector. So I think it's worth thinking about what diversification actually looks like in a market that is starting to show some signs of a pullback and a correction.
Understood. Let's hop into the next slide here. Now we're talking about the Fed. We have a new Fed chairman. We don't yet know where he's going to go to. We know Trump has told him, do what you want to do. This is because Trump had told the other guy, you must cut rates. US is fighting a war. Oil prices are going up. Why are Fed rate cuts important? Because if the Fed cuts rates, it affects the Naira, it affects everything. But what's your take? How important is this Fed hike or cut in how the market in Q3 would respond, US and Nigeria? Is it really a massive factor for Nigeria?
I wouldn't say it's a massive factor, because when you think about Q3, that question has been all but resolved. So the market is not expecting any rate cuts or any rate hikes during this quarter, right? Because even the inflation numbers are not coming down fast enough to be able to say, hey, let's cut rates. But at the same time, hiking rates is not only is it politically dangerous to hike rates, it's also just not data backed. Right? And the new Fed chief has said that, look, we're just going to follow the data. We still have this 2% target for inflation, and we're going to do everything possible to drive it back down. And I don't know that hiking rate is one of the tools that he wants to use to do that. So it's not important across other markets, right? But I wouldn't say it's something to really, really watch. It's more of, you want to also pay attention to the same data that the Fed is paying attention to, so that you can kind of not almost guess their moves, but at least know where their thinking is headed, right? And that allows you to position, because this is the kind of Fed that is data driven, and the data it operates on a lag. right? So if oil prices drop today, you're not going to see the effect until maybe like 2 3 months in the numbers, the actual numbers the Fed uses to determine rates. So it's more of, hey, you're going to be looking at oil prices. They're going to be looking at consumer prices. How are those trending? Where's their head going, and positioning for that.
Interesting. Yeah, I did see something that said coal was still flat in the US even after tariffs and the rest. That was interesting. Let's come to this part now. You said, what exactly should I do with my money? What actually should I do with my money? I like this. You have 5 points here. Do you want to walk us through it?
Yes, of course, I'm happy to. So the first point here is to actually know what game edge markets play, right? So the US market is again heading into correction territory, right? And it's important to note that if you want to play that game, the game you want to play is a defensive game, right? You want to park the bus. You're not trying to go in there and try and do something crazy within the next couple of months. You're going to get hurt. So most investors, even last week, we're seeing a lot of money rotating out of tech and into healthcare, into consumer staples, essentially defensive sectors and defensive positioning. And you have to really watch how money flows. That's how you know where to position, right? And the second thing is quality over quantity everywhere, right? And that matters most in Nigeria. So in Nigeria, look, the kind of macroeconomic position you want to think about is stability. So we're not trying to say like, hey, look, inflation is going to tank and like, oh wow, revenues are going to go up and it's going to just be a booming market. Instead, what we need is stability in the markets, right? And when it comes to stability, you're not looking for people that are necessarily going to do volume growth, but you want to say, hey, look, even with this macroeconomic condition, can you maintain your margins, right? Can you make sure that you don't allow costs to overrun? Can you make sure that you're able to source your raw materials for cheaper? Can you make sure that even if you don't increase prices of your goods, you can still have a good profit after tax? So that's why it's quality names that you really want to be paying attention to over just companies that have a good story and have a good vibe behind them. Then the third thing is corrections. So I think some people they have this view of the markets that look, it's just a line that goes straight up. They don't understand that look, it's a bumpy ride and you're going to have corrections. And that is just a part of the game. It's not necessarily a sky is falling, sell everything and run away. No, it's just a healthy market feature. And for some people, they take it as opportunities of actually getting into those good names at a discount, right? And then the fourth point is about holding kind of like Naira dollar assets. So Bamboo allows you to both hold US assets in terms of, US stocks, REITs, that's real estate investment trust. You can also do fixed returns in USD. On the Naira side, you have access to treasury bills, Naira savings, and also Nigerian stocks. So instead of necessarily trying to guess where things are going to head, so you can hedge by giving yourself exposure to both the Naira story and the dollar story as well. And then the final thing is diversification. So diversification today is not buying an index. I think a lot of people have been sold that story that, hey, buy the S&P and you're diversified, but that is just not true. You have to do the extra work into saying, hey, what are industries that are protected, whether AI does good or bad in the US markets? What are industries, what are things that people are going to buy regardless of whether, Meta is spending 700 billion on infrastructure. So that's how you want to think about diversification. You want to be more intelligent about how you allocate capital and do the legwork beyond, hey, buy this ETF and go and sleep.
Gotcha. Interesting points. Let me get a few guys also speak and then we'll come back to you again. Let's get Jamiu. Jamiu, you've got the floor, Jamiu. Go for it. And I've got Abdullahi. I see you dropped off. I've sent you an invite again. So, Jamiu, you've got the floor.
Hey, good evening, Mr. Carter.
How you doing, sir?
I'm fine, and you?
Very well, sir.
Thanks for the platform.
Thank you.
Very grateful for the initiative. I would like to ask the Bamboo, what are you trying to do in regards to their estimated cost when it comes to the charges?
Jamiu, can we focus on the economy? I wanted to be we're talking the economy. I don't want to be about. Do you know my point? That's going to be once you ask that question, I was going to ask a Bamboo specific question, but can you focus more on the presentation itself? Is that going to be possible?
All right, then it's fine then. Let's continue then.
I appreciate you, sir. Really do. Yeah. So, I know I added this gentleman, but it's not in here. But let's go ahead with the slide on the 6 weeks. I see your calendar here for 6 weeks. CBN is going to have their monetary policy decision. Does it really matter? Again, does it matter if the CBN cuts rate? Do we see it like in the US where CBN cuts rate and market goes up or down? Does it really matter? That's number one. Number two, I see you have Zenith Interim Dividends Watch. Why is that important?
Okay, so to your first question about CBN cutting rates is actually important. So it's the same thing in the US. So heading into the MPC meeting, the market already understands that hey, look, there's going to be a cut, so there's going to be a hike, right? So that's kind of like priced in earlier. What is important are the meeting notes that come after that decision because you want to know how the people in charge of making these decisions are thinking about it. So it's the same thing with the Nigerian side, right? You want to see the commentary, you want to hear, look, what are they saying they want to see come down before they make this decision? What are the levers that need to sort of like be flipped before we see things moving in this or that direction? So it's not necessarily the decision, it's the thinking behind the decision. And then you mentioned the interim dividends. I think so you know how banks were not allowed to, I think, give out dividends until they clean up their books.
Yeah.
So it's something of that nature. That's kind of how we're thinking about it. Like, look, if we sort of see a return to dividends being declared, means that the recapitalization was successful. Because I believe one of the uses of that capital was to clean up the balance sheets. Yeah. So if you have a clean balance sheet, you have a clean bill of health, you can issue out dividends. And we saw what happened with Access Bank when they held back dividends, and we saw the reaction in the stock price. I think it was also UB as well. So those are things that you also want to kind of like monitor as a sign of sector health.
Understood. I get that. What about the Dangote IPO? Everybody's waiting for it. It has gone from June, July, and August, and all that. Now we're talking August, September. Is that going to happen? I was surprised that it was just raised to 2.5 billion. I thought everyone was going to just buy that stuff in a jiffy. But is that really going to happen in August, September?
So it's not for us to comment on because, like I said earlier, no applications have been made to the SEC. No filings have been made ahead of time showing that this is going to happen. So until that is done, everything is just speculation, right? And, again, I believe the SEC released a circular saying that, look, no one should be promoting this sort of thing because, again, we have not received any application about it. But like I said, it's not necessarily even the IPO that is, the key thing, whether it happens or not, right? It's more of, look, what is it going to mean if this happens? What is it going to mean if it doesn't? But I think that the market really has good legs to stand on. So regardless of the verdict from this IPO, I remain bullish.
On Dangote or the market?
On the market, generally.
Nigerian market as a whole. Okay.
Yes, on the Nigerian markets.
I've got Anselm. Anselm, you got a question real quick? Aslam, go for it.
Thank you for. Okay, good evening, everyone. For allowing me to ask my question. My question, real quick. Congratulations to Nigeria for being the best performing market in the world. I just recently started investing, and luckily my portfolio is up 50%. I'm really excited about that. So my question is: do you think this is a bubble? Do you think it's going to stop anytime soon? Should I go harder or just calm down?
That's a great question. That's a simple, great question, Aslam. Thank you for that. But I mean, he's asking what everyone's asking. That's also what the first question I was asking. Is this a bubble? Is Nigeria in a bubble territory, or are earnings actually going up? We've seen consumption is very, very weak in Nigeria. Why are stocks doing well when the economy seems not to, be at 100%? And is this a bubble, more or less?
Okay, that's an excellent question, and I just want to point out that look, it's not unique to the US or to the Nigerian markets actually that there's a disconnect between actual things happening in the underlying economy and the stock markets. That also exists in the US markets, right? There's even a K-shaped economy where a lot of the spending is actually being driven by like the higher income folks. So it's not new, and I understand because we're mostly Nigerians on the call. We understand the real day-to-day reality of the average Nigerian. But then it's disconnected from the stock market, and that is just a feature, right? And it kind of warps your brain a bit because you start to struggle with, hey, this company is doing good and you're making money. And if you're making money and earnings are growing, you're going to see a reflection in their stock price. But then in the real economy, like things aren't doing so good. So as an investor, it just gives you some things to think about. But look, if the market is saying that we want to see earnings growth, we want to see margins growth, and if that happens, there's an appreciation in the stock price, then that's just a mechanical thing, right? That's just mechanics. So if you invest according to those mechanics, I don't know that that would be a foolish use of capital, right? Let's take a look at NASCON in Q1. NASCON reported lower volumes, right? But they had higher profit after tax. Why is that? They had the benefit of a stable currency, so the cost of goods sold rapidly came down. So that's just an example, and we see that look, the value chain is broken in Nigeria, right? Macroeconomic reforms do not filter down directly to the average citizen, but they do to businesses. And businesses are able to capture that value, and we see it being reflected in their stock price, right? So it kind of does make sense for the average citizen to then try to partake in that value creation by buying shares and protecting their own capital. So that's kind of like the way we look at this. And, not investment advice, obviously, but it's sort of something to think about.
And if I could ask Aslam, you said just straight into the market. Did you buy an individual stock or did you buy like a mutual fund or ETF? How did you do it?
Okay, I stepped into the market about 2 months ago after doing extensive research, and then I bought individual stocks. Particularly, I don't know if I'm allowed to mention the stocks I actually bought because it's not financial advice. I bought MTN, Tesco, Stanbic ITC.
Okay.
And then, luckily, both of them, just my portfolio is up 20% now, and I'm really excited about that.
Before stocks, where did you invest? Before you bought stocks, where were you investing?
I was just saving on. I was just using a saving app that connects to their mutual fund. I think PiggyVest. I just kept all my funds in PiggyVest. Their mutual fund gave about 16%. But then I decided to just invest more. I squeezed my money and I started investing, and so far so good.
Yeah. So I mean, but this is the story, right? That we want to see where we have more younger people looking at the market as an avenue to create wealth and moving money away from, say, safer. He's a young guy to taking advantage of the market appreciation and riding that growth in Nigeria. That's basically what he's doing, right? Do you want to see more of this?
Yes, we do, and it is sort of kind of one of the pillars of the bullish performance we're seeing on the NGX. So, in fact, it's more, the highest number of retail accounts that have been opened in the past year has been done on Bamboo. Wow. We're seeing expense there. We're also seeing that even just as a composition.
Aslam, you have to mute. Sorry about that, because you have an echo coming back in. Yeah, thank you so much. Yeah, but you were saying that the highest number of retail investors have come from Bamboo?
Yes. So in terms of accounts being open, yes, Bamboo has been powering that. So we're seeing explosive growth in terms of like our interest from retail. And also when you look at the composition of the Nigerian stock market today, retail is starting to get sort of like a bigger share of that. I mean, the institutions are still the heavyweights. And also, if you kind of like go up again, you see that it's like 70% domestic capital in the market. So that capital flight that used to be a risk before, it's not so much a risk. But again, the more we see this, the more it contributes to market stability, because you want a market that is, anchored by home investors, right? These are people that understand the day-to-day businesses. They actually purchase these goods and services. So there's not that risk of like, hey, capital flies from foreign investors pulling their money out. So yes, this is a welcome development, and we're happy to continue providing a platform to support that growth.
Okay, let's now talk, since we're now on that, let's talk about what Bamboo is doing, the actual things that Bamboo is doing. I like the slide. We have the Nigerian and the US and how we can play on two markets. I always make this steady story. When I started to invest, there was no internet. You had to physically go to a market and you could only buy Nigerian stocks only, right? Now, from anywhere in Nigeria, if you've got internet with Naira, you can fund your account in Naira and you're able to buy stocks anywhere in the world, any ETF, any stock. It's a big opportunity for everyone to participate in this global wealth rush, right? So let's come to this slide. You're talking about how to take actionable steps. Buy Nigerian stocks on Bamboo, buy US stocks ETF rates on Bamboo. One rewards patient, the other rewards discipline. I think it's both, right? But talk to us about this slide you have.
Okay, so it's one thing to maybe hop on a space and talk about like the market, the economy, and everything that's going on. It's another thing to say, hey, look, after everything I've said, there's a platform that allows you to position for both, and that's one of the joys of investing on Bamboo, right? So for Nigerian stocks, we do have these Nigerian stocks on the platform. We have the new liquidity meter, ensuring that you are getting into a trade armed with information. You know that there are buyers and there are sellers before you jump in. You're able to see a live order book, so you know if at this price you want to buy, they're actually sellers for that price. And on the dollar side, also we also provide those opportunities. So we have ETF that actually provide diversification if that's what you're looking for. Real estate investment trusts have been doing fantastic this year. There's a REIT that is, I think it's focused on maybe like healthcare and these homes for senior folks in the US, doing amazingly well. It has the S&P 500.
But what's the name?
So
I'm interested in that. What's the name of that one? Do you have the name?
the name of it's American Healthcare. The ticker is
American
AHR, right? So we
AHR.
have these names that are off the beaten path. If you're looking for healthcare, infrastructure funds, energy, dividend ETFs, all are available on Bamboo. Even if you're trying to get exposure to other markets, for like example, emerging markets are doing really good this year. There are ETFs that cover emerging markets, right? So when we speak about a market rewarding patience and one rewarding discipline, I think you're right that it is both. Like both markets actually do that. But then when you think about heading into Q3, what or how should you be thinking about the US and Nigerian market is that for the US markets, you kind of want to be disciplined, and for the Nigerian markets, you really want to be patient, right? Because investing has this big game of patience. Not doing anything with your portfolio is actually a portfolio action. It feels boring. Your hand may be scratching you, but literally not doing anything is also a trade. As much as buying and selling is a trade.
Okay, my own question is that if I invest with Naira and I buy a US stock, do I get dividends in Naira or dollars? Or I can choose?
You get your dividends in US dollars.
Whoa. So it goes like to an account. So I can get from the bank, or it sits with you guys in dollars like an app or something like that?
So it comes directly back to your wallet.
Okay.
It comes directly back to your wallet, and if you don't use it, it's automatically reinvested for you in safe treasury bills, for example, and it just gives you additional interest.
Do you guys have dividend reinvestment plans on the app? So if I bought, say, whatever, Nvidia, and I want to roll my dividends, could I do that on the app?
Yes, I believe there's a feature where you can automatically reinvest your dividends.
Okay.
But then, yes, most people may forget, and that's why there's a feature where if the cash just sits in your account, it's automatically reinvested in, some other safe options for you.
Understood. I mean, well, on one time, let's get a man like Zeal to speak about what he has been hearing. Man like Zeal, you're on tap. Go ahead and speak. Man like Zeal, where are you at? Okay, again, I can't read most of the DM questions. I'm trying to be very, very quick, but I'm just going to go in real quick. This gentleman's been trying to speak. Emmanuel, let me add you. I'm just on that question, someone is asking, if I buy, you talked about the guy that's in Ghana. So if I buy from Ghana, do I have to use Naira? It's saying does he have to use Naira to fund his account in Ghana? How does that work?
No, you don't have to use Naira. So for markets where we operate locally, you're allowed to, or you can deposit in the currency of that country. So South Africa, you can deposit with rands, and Ghana with cedis, Nigeria with Naira, or even US dollar as well.
Oh, fantastic. Yeah, I did the fixed income with you guys because the rates were 7%. US is 2-3%. So that was a no-brainer. I just did go out of the way. Man like Zeal, calling you one last time. You're not speaking. Let's take Jimmy. Jimmy, I'm going to add you in here. Anselm, thank you so much. Let's get this guy to go. There's another question here. The liquidity meter, I can't find it. I'm on the app. Where's the liquidity? Where is the liquidity meter. Where's it going to be? Somebody said you can't find it on the app.
Yes, let me just verify. Quick check. You need to make sure that your app is updated, that you have the latest version of the app. So that's the first thing you want to do. And then once you have that, once you tap on any Nigerian stock, immediately you tap on it, it's going to be on the page that loads. It just jumps right as you. It takes a good percentage of the screen, so you can't miss it.
So maybe so just see if you can reload KG see if you can reload KG right, and that should pop up for you. Ruben, so sorry about that, guys. I think you guys are adding and dropping off. I do apologize. Let me see if I can get Ruben in here whilst I read. Yeah, so down is just either you refresh the app or you log out and log back in. It should be good for you. Yeah. Ruben, go ahead, please.
Okay, thank you very much, Mr. Pablo and Bamboo team. I just want to confirm something. He was talking about S&P. If you buy S&P and you think you have bought a chunk or something, I'm not too sure if I'm getting it right, because my network was flickering during. So I'm asking, from my understanding, when you buy S&P, which specifically is maybe VOO, for me, what I understand is that you have actually bought a large chunk of the market. But from what I got from his explanation, the Bamboo explanation, it's a little bit contrasting. So that's just what I wanted to clarify.
Yeah, but I think he's talking about when you divest.
Happy to clarify.
Yeah.
So yes, we need to put that within a very specific context so it doesn't get misunderstood. So when you're talking about Q3, right, heading into the next 3 months of the year, the US market is very concentrated. It's very volatile, and a third of that S&P 500 is essentially tech companies, which are going to bear the brunt of the volatility. So if you're thinking about diversifying, like as part of like, hey, I want to defend my portfolio, so instead of buying individual tech stocks, right, let me go and buy an ETF. We're saying that you're still exposing yourself to that same concentration, like you're not being as diversified as you think you are. If you zoom out of that and if you remove that context, the S&P 500 remains obviously an excellent choice, an excellent vehicle to protect your wealth and to diversify your assets. But then just within the current market environment, it's not the choice for diversification necessarily.
I think we'll also add to is that I think VOO is 500 stocks, the top 500 stocks in the US stock market. VTI is 3,531. So just if you have a wider sample, then it's possible that you are sort of washing away that AI dominance. Because what you're saying, is clear. If you buy just the VOO, the bulk of your earnings, the bulk of your returns is going to come from those 7 Mag 7. That's basically it. If you Mag 7 is going to dominate your VOO because it's just 500. But when you start to expand into VTI, you are talking 3531. If you want to do massive diversification, you can go into VT. VT is everything, all the stocks plus Samsung, plus Alibaba, plus Shell, plus all those companies. VTI is US. VXUS is US minus the US. Sorry, it's the stocks minus the US. And then VOO is just the 500 stocks that are mirroring S&P. So again, like the point is, when you are building a portfolio of even ETFs and mutual funds, assume you are building a portfolio that you also have to diversify within mutual funds. So you're not just having Mag 7 in 5 mutual stocks and you think you're diversified. That's what Balaji is basically saying. You basically think you own 5 mutual funds, you think you're diversified, but essentially you just own one and you'll be exposed. Yeah. All right, look at the time. We made it. We've got even 2 minutes to spare. I think, Balaji, I can't thank you enough for coming in here to share this insight with us. I think everyone that has joined the space from my responses here has enjoyed it. It's been fact-based, lots of information, and again, like you said, actionable. So you can take most of this and go out and trade from Monday. I'm particularly interested to see that liquidity meter once we're out of here, because I usually post, I'm going to just start to use that to then see if those stocks are basically really moving in terms of volume, or if it's just one or two guys trying to move those stocks up. So I do appreciate you, sir. Do you have any closing thoughts, Bolaji?
Yes, thank you so much for having us. It was an excellent conversation. Looking forward to doing more. And once again, Bamboo is essentially trying to be the best place to build wealth for an African period. And I think having retail investors as part of that journey, doing a lot of work educating investors, closing the gap with financial education is a key lever that we're trying to pull on. And we appreciate you for giving us a platform to do that. Thank you.
Thank you, sir. We will invite you back, and we hope you will come back and share more of this with us. Yeah, really, we would love that. Thank you, guys. So on that note, guys, I'll let you guys go. I see it's messy on the field yet. Let's go have fun with soccer. But remember, just like we used that, the theme of the space today, it's halftime. Same with you. It's halftime in your investing journey. You've got 6 months, or should we say 5 months, really, that are blank sheets to start to do those investing, those rebalancing, and those value plays are going to tell for you going forward. So don't sit on the fence and don't say things are bad, I won't invest. Don't do that. You have to be invested. You don't have to buy stocks. You can buy fixed income and be in the market, but just don't take your cash or your opportunities and sit on them. Remember the Bible, the guy that took his talents and buried them. Remember what happened to him. So you've got to be investing, right? You've got to be investing. Thank you so much, guys. I will see you guys here next Sunday, 7 p.m. West African time, when we have our discussion on money, the economy, and finance. For now, thank you for being here and take care of yourselves. Bye. Thanks, Bonji. Appreciate you.